main metric all investments should look at is the relationship between price and earnings. How much you're willing to pay for what level of expected earnings. In the stock market, that relationship is simply called the PE ratio, price over earnings, and it varies based on market conditions. That same price to earnings ratio is used very much in private real estate investments, but it's referred to as cap rate. And that ratio is earnings over price. So it's essentially tracking the same thing, the relationships of earnings with price. One great example of that is a 7 cap. And the 7 cap is industry jargon for 7% capitalization rate. If you're willing to buy an asset for $100 million, you would expect earnings from that asset of about $7 million. Other major market trends that should be tracked and considered would be leverage ratios. Leverage really impacts the degree of risk an investor is taking before the investment is even made. When we buy private real estate, typically we call a bank and get between 60 and 70% of the capital we need to purchase the real estate from a bank. However, many groups are willing to lever up to 80 or even higher percent of the purchase price. And should the market change, those investors would be at a way greater risk of losing capital. So the two major metrics I really focus on when I consider investment alternatives is the relationship between price and earnings and potential value growth in addition to that, and then leverage points and leverage ratios.